Welcome to TradeTheMBA.com. This is John's report. It's for the 12th of July. Well, yesterday we again hit that 38%, rejected off of it slightly. We've seen a pivot lower here of the magenta, and now actually starting with it below yellow. We'll see if it maintains that. That would be a clear indication that we're going to violate that 23%. We're not seeing an uptick, though, of white. We would want to see that for clarification that things are going to go. But here on the DOC, you get that clear indication where the orange crosses above steel, and it's always those crosses that are critical. And steel being short-term buyers continuing to fade. Short's not really active per se in this, so probably not going to be severe at this particular stage. We also have rising gold on the shakeout. It's usually enough to support if we hold above the 23%, but below that clearly becomes a problem. And you can see that the 23% right now, 37.96 range. That becomes a clear marker. Below that point, definitely is a strong short, but intraday we're going to see that it's pretty clean, even all the way up at the 38% from that standpoint. From an NQ standpoint, much worse because you already had white above magenta and the magenta fading. So as we talked about that the NASDAQ was leading the rise, it's also now leading the decline, which is no surprise and very consistent within that DOC. Could be enough midterm support here to hold it above that 23% with the green midterm buyers over the shorts here on the DOC above the red. So you get some confluences that are just contradicting each other with the different monies coming in and that may be just enough to keep things in more of a status quo, barring any special news. Well, this doesn't get any more shocking or less surprising because the reality is the euro really facing a tough time. In fact, it reached a new low. I don't know if we can see. Let me draw that over here because you don't see that very often. There it is, parity with the dollar. Well, just shy of it. That is 1/100,000th of a penny from perfect parity. So it could break below there, and that would not be a surprise because if the Fed continues to raise rates, ECB is pretty much stuck, unable to do so. They're already in near crisis form as it is. So what alternatives do they have? And really devastating for the EU with what they've done with the sanctions. And as we talked about, the maintenance on Nord Stream, the Canadians have released now the turbine that they needed to fix it, to allow it to go back to Russia. It sort of violates the sanctions, but this is just an indication that the real economic power was with those that actually have the goods that you need to survive, and there isn't enough green energy in all of Europe to satisfy the demand that exists. Gold continuing its weakness. Of course, I think this is going to be a good opportunity when the buy signals actually do come in because really undervalued from a standpoint of what's going to take place, continuing to take place from inflation. You're hearing everyone talking about how July inflation will have peaked. And while that may very well be the case, it's not definite because there can be, if the Nord Stream doesn't go back on and you have issues with production in that, it's obviously causing Europe, economies to slow much faster. We're not necessarily certain that that's the case in the U.S., though we're starting to see signs of it in the housing with the rising rates and how much of a halt that's put to things. And, there's definitely got to be a balancing act in between there. But that we'll start to get indications whether or not the rate of inflation increasing has diminished, not that it isn't already at elevated levels. So there's a distinction there. From an oil standpoint, still above 100, but right at the edge of it. And some are talking about the potential for that to continue to soften as additional flows come through and or the diminishing of demand. It's a two-sided coin there. So that really has an impact on it. Treasuries, again, the yield was rising. But with that, you get a lot more interest in it. pop things back up again. But if the Fed continues to raise rates, we're definitely going to see this break 100 from a TLT, which is the 20-year Treasury. From a Bitcoin standpoint, just unable to garner any new support. Obviously, with the declines that we've seen, the increase in the cost of money makes it much harder to be as speculative as some had been, and it's having trouble holding that 20, and that becomes a key threshold if it's unable to do so on a regular basis. And then you look at the daily, it's not all that positive for it. From a 50K standpoint, it was towards the start of the day yesterday that we began the decline from it. Never recovered, and it's continuation of that right now. Intraday, from the 5K standpoint, we started off with weakness, tried to battle it back, made a little bit more weakness, and things then started to get a little more interesting at the later part of the day. We ended up with a nice strong rally that took us all the way back up, but as you can see right here, red, 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 so positive extremes. And so I'll tell you why this became very attractive to me. In fact, I should just put a line there because that's a significant, not vertical, a horizontal line. Right at the lows right there. And once we started this divergence and kept having them, as soon as I started to get my dips of magenta below yellow, and this was very early because yellow is still above 33, but by the time we reached the second one, we were below, and that became an attractive short point right around that 38.80 range. And sure enough, next bar popped up a little bit, got back up to 79, and that was the end of it. And it started cascading, filled the positive extreme completely, and then had some carry through. And that's typically, in a bull market, we typically get the return to the positive extremes. In more of the bearish tones, we end up breaking through those as more supply is available on the bottom side of it. And sure enough, we dipped reasonably below it. But they made a run back right to it, but you can see right at that line, algos hit it, and they started shorting that cleanly for the pre-market move. And it still looks considerably weak at this particular point. So there you have it. And that's why we mark those, because they are very powerful actual support and resistances, as opposed to just some random number that people draw a line on. And this is based off the algos and the activity that's taking place, and that's the significant nature of it, and why it's such an important relevant feature of what we have here. Even when we produced these right here, that was an excellent return base to the 60 range, 59. So when we had these pops in the 60 all the way up to 65 in this particular case on the post market, it gives you just a general guideline for collecting some quick gains and either allowing stuff to return and knowing just above there how much you're willing to risk as far as risk reward ratio for the bigger returns. And in this case, clearly was in a sell all the way through, so it never recovered from it. And that's the long and the short of it for right now. As always, though, I will continue to update you on the Skype chat. Trade well. We'll talk to you later.